Let's break down the latest results with John Eade, who's joining us from Argus Research. John, your immediate reaction to the numbers that we just got today? Street certainly liking it, at least on the initial pop.
Right. I think we're seeing some incremental improvement, maybe not necessarily on the top line, but on the bottom line with management's focus on improving margins. The street was looking for better earnings growth, and that's what they're getting here today.
And John, some analysts, your colleagues on the street, they were talking about the volume environment they described as kind of so-so and tepid. And that makes sense given some of the macro challenges, slowing imports from Asia, weakness in Europe. How do you see it, and what does it mean for FedEx?
Well, that was one of the things I was hoping to see was better volume numbers from FedEx. That didn't happen. I think last quarter, the FedEx volumes were down 7%. This time they were down 9%. FedEx is still getting some price help. That's a good thing. But the real story here is the costs that they're taking out of the system. And when the volume does come back, and it will come back, right? This is a cyclical business. Global growth will pick back up. If they can keep those costs low, they're really going to see some profit margin leverage when the volume does return.
John, we saw a lot of businesses migrate over to FedEx in the initial anticipation of a potential UPS strike. Certainly, FedEx coming out the beneficiary of that. There was also the bankruptcy from Yellow. But when you think about where the labor costs are right now, how as an analyst are you looking at it in the context of FedEx? Yes, things came over from UPS, but UPS coming out of this with workers seeing those higher wages, what's the pressure now that shifts over to FedEx?
Well, that's a great question. And UPS has a history of being a lot more profitable than FedEx with higher margins. For example, UPS's margins are typically in the mid-teens range, and FedEx has set an aspirational target of 10%. So I think what FedEx is trying to do is use data and technology to offset these labor costs and do a better job of flying the right aircraft and lining up the employees when the volume is weak or when it picks back up. None of these transportation companies, whether it's Yellow or FedEx or Old Dominion or UPS, can do very much against these higher labor costs. That's more up to the Federal Reserve, and it looks like there's another hike coming, so maybe that will help.